So let's get started. So when we talk with when we talk with and looking at trading and stuff, we look at charts, and I'm going to show you an example of a chart. But there's a couple of things I want to talk about before we start, and that's we're going to do candles, and I'm going to go over what that is. When we look at candles, it's basically going to be either a red or a green line, and I'm really great at drawing. But here is a candle. So this is, you'll see what's called a candlestick. Now, what this basically means is the thick part of it, it's just a candle. But there's a couple of things. There's 4 points on this candle that we look at. The starting point of what's called the candle, this is the starting price. And then this is the closing price. And then you have what's called the wicks. So you have, oops, that's a large thing. And of course it's not gonna, you have 2 wicks. And with those wicks, this is gonna be the high price of the candle. And this is the low price. Okay, so so that's what we get into when we look at a candlestick. And I know this is kind of basic for some people, but if you're new to trading, you may not even look at the candles. You may just look at literally like a line that goes up and down, like with Robinhood and things like that. But it's good to know what these form. Okay, and I'm going to show a concrete example just in a second, but I just wanted to get the essential basis down. Now you'll see there's red and green. So if you have a red one, the only things that switch is just these 2 things, the starting price and then the closing price. So a red candlestick means it went down for that time frame. So when we deal with candlesticks, we deal with time frame. Now, depending on your broker, you're going to see these different things. So M, lowercase m, is going to be for minute. H will be for hour. I mean, it's pretty self-explanatory. D is for day. The only thing that some people may just get confused on is the uppercase M means month. And that's basically it. And you can change these time frames with at least the software that I use. Okay. So let's just pull up an example. So here is an example. This is Amazon. Oh, thanks, David. Give me one moment. So this is the program that I use. This is called Thinkorswim. And Thinkorswim has a really good program that it has basically everything you need. It can do alerts, and actually it can do what's called SMS alerts or text message alerts. It can do email alerts. And so basically, once I show you these strategies and some things, you can essentially have it text your phone when something occurs, and then you can make a determination on what it is. So this is called Thinkorswim. I'm going to type it in chat. So this is Thinkorswim. It's TD Ameritrade. So what you want to do is you don't need to essentially trade from this platform. I don't actually. I use something else, but Thinkorswim is the only free software that I've found that can do everything that I need to do for a day trade or a swing trade. But that's it. Okay, so this is just a chart. So there's a couple of things when you look at the chart is, okay, well, we have this D. So remember, this means day. So essentially each of these candles that you see is considered one day. So what's nice about Thinkorswim is when you click on the time frame setup, it will tell you how many days you're using. So when I do the 1 day, it's 1Y, so 1 year. So I'm having 1 year's worth of data. So this is 365 candle wicks, or I'm sorry, candlesticks, and that shows all this stuff. So it tells a story. So when we look at charts, we're telling a story. Okay, now I know this is simple, but we're going to go into more advanced things, but I just want to make sure everyone's on the same page. So are there any questions with the candlesticks? All right, moving on. So this is going to be the first thing we're going to talk about, and this is your technical analysis. So we're going to discuss, so these are a couple of things I use for my toolbox to determine stuff. So the first thing is what's called your SMA, your simple moving average. So what an SMA does, what is the wick above the closing price? It's just called a wick. You've got wicks and the candlestick. So this part's a wick. So the question was, what do you call above the candle? Oops, that's a bad. So these right here are just called wicks. So if you go back, so if you look, this is the high price of the candle. That's the low price. So when I'm looking at something, so if I were to just look at this wick right here, I can see the high price is like 35.91 or something like that. This wick down here is 35.18. So this is just telling me the range. But again, the bottom part, because it's green, that's where this opened and that's where it closed for the day. So if I were to actually look at this candlestick, what I could see is actually the range was actually decent. There was some fairly decent trading for Amazon for today, but it just closed just a slight smidgen above. So I can see on mine, it opened at 35.67, it closed at 35.73. So that's when you're looking at candlesticks, what you're looking at. So you can see on this one started out at like 35.30 and it went all the way up to 36.75. So it closed at a high price on that day. And it shows you on the bottom. So this is the first thing that we're going to add to our charts. So if you have Thinkorswim, you're going to see how this is done. If you use another broker, then I mean, all the stuff is essentially similar, not the same exactly, but the terminology is there and everything else. So this is what you would call either a technical indicator, and I'm going to type that. Either will be called a technical indicator or a study. Okay. There is a question: how come the open price of the candlestick doesn't match the close price? They will be similar, except remember the market is technically closed from 8 p.m. Eastern time until 4 a.m. Eastern time. So there is going to be a gap. So if the market moves, while the futures market moves 24/7, that's what dictates the price. That's why you won't see, sometimes they won't match, because the open and the bid and ask prices will be different on the next day. So the simple moving average, it's pretty simple, no pun intended. It shows the average length, average of the length at the time you look at it. Okay, so when you look at SMA, a very common one is 50 days. And this word right here, I put length. This is important because I'm going to show you, because when we're going to do day trading or swing trading, we want to change some of those lengths. So if you have Thinkorswim, I'm going to show you how to do it. If you have another broker on the computer, there are technical indicators on, I know Webull for mobile, there are things, but what you want to do is, I'm just going to show you how to do it on Thinkorswim. So what you're going to do is you click this little beaker. Oops, that's edit, sorry. You're not going to click this beaker. You're going to click this beaker over here, and I'm going to highlight it. So what this beaker is going to do is, this is my studies. And what I'm going to do is I'm going to add what I just explained. So what the simple moving average does is it takes the average of whatever my length is, and then it adds it all together and it creates a line. So let me actually show you what that looks like. So just give me one moment. I wanted to show each indicator all combined together so you can see a larger picture. So that's why nothing's up. just so you guys know. Okay, so what I'm going to do is now I'm given this length or this this line right here. So what that is calculating is it is actually adding whatever my length is. It's going to add up whatever that amount is, and then it's going to basically plot a line at what the average is. So what I want to do, if I want to look at it and modify these technical indicators, and this is the same for every indicator that shows on the graph, but if I click on this blue line, which is what my SMA is, and again, I'm going over a couple things before we do anything else. But if I click on the blue line and I right click, I now have, you can see length. So there's what I was talking about is length. Length is it's adding how many time frames to average out. So this is where it gets into math. And a lot of people don't do this. They don't realize it. But what they do is they just change the chart, but they may not change the lengths on this. And I'm going to go over some of the math on this part. So since I'm doing day and I want to find a common one is 50-day moving average, I change it to 50 and I just click OK. So see how it smooths outward. Okay, it smooths. The longer the length you have will give you a more smoother thing. So when you deal with lengths, that's going to talk about speed. So when we deal with that, what that just technically means is how fast do you want to get in and out of a trade? Because you may get a signal that will be literally a 30-second time frame to get your profit and get out, because it could go in different directions. So let me just write that out. So length equals the time frame you're looking at. Okay. Now this is where it gets into some math. If I change my chart to a smaller time frame, this SMA will get smaller as well. So what I mean by that is if I select the 5M, the lowercase m, which means 5 minute, this now changes. The reason why this changes is because it's still selecting the length as 50. So really when it's looking at the 5 minute chart, this is really looking at, so do the math. Sorry guys, I'm looking for it. So 50 times, so 5 minutes times 50, so that's 250 minutes. So what this is doing is this is adding up 250 minutes of the candles to then average things out. Okay. So again, the length is the time frame. The larger the length is going to be more time. So it's going to be a smoother thing. And I'll just point to a couple other little things real quick. So this is now the 1 hour. This is the 4 hour. And this is going back to the 5 minute, because that's what we want to look for when we're doing day trading. There was a question, can we infer volumes from a candle? Regular candles, no, but with Thinkorswim, it does show you the volume on the bottom part. And for me, I have mine set up in a certain way where it shows you the volume, but it just shows the volume on the bottom. So going back, when we're dealing with the simple moving average, this is, I have my length set at 50. You can set it to whatever you want. If you want to have a longer time frame, that can mean you're waiting for something to bottom out. So so what a strategy would be for with a simple moving average. So this is just one strategy. It's not going to make you rich right away. You know, you use it in conjunction with other things, but we're starting the story. So if I were to trade Amazon and I'm looking at the 5 minute, let me get rid of some of this stuff. So this is technical analysis on how you would enter a trade. If I were to look at, so this is what, 1 day, 2, 3, 4, 5, 6, just so you know, the highlighted region or the gray region, this just means pre-market hours and after-market hours. But if I look at the line, so my line's showing 50 minutes, I'm sorry, 50 length at a 5 minute. So roughly in the 6 hours of time frame, it's having a roller coaster, but it seems to be going downwards for this time. So the strategy would be, if the line is pointing downwards, you would short or buy a put. All that means. Now there's more advanced strategies, but this is just, this is what we're doing. Now, looking at something that would be considered realistic, notice it goes down, but then it kind of curves upwards, but then it goes down, and then it curves upwards, and then it did go upwards, and now it's kind of bottoming out. It looked like it bottomed out right here. So the strategy would be, if you see it trending upwards, then you would go long. Now, this would be if you were day trading it. So you can see, if I were day trading it, well, the market shot down and then shot right back up a lot today. So today was kind of a choppy ride. But if I go back out, so if I were day trading this or swing trading, this looked like a short for this time frame right here. Right here, this looks like it's a long term. Now, this is where it gets into more advanced strategy. If I were to change my length, so when we think of length, it's the time frame you're looking at. Think of a difference between a microscope and a telescope. If we zoom outwards, we're going to see more of a story. But then when we use a microscope, we want to get right into the precise point on what we want to do stuff. So if I were to day trade, 5-minute chart is what I use. Other people can use the 1 minute. Some people even do ticks. I won't go into what that is, but you can look into what a tick is. But if I look at the day chart, so this is where things can get missed. There's different parts of information, because what did I say before? On the 5-minute, it was going downwards. But as you can see, Amazon has been kind of stagnant for a long time, because I'm on the day now. But look, it's been slowly going upwards. So this is where you would get into multiple charts. You could have one chart on the 5-minute, one chart on the day, because I know Amazon's going up. So maybe I want to get in on Amazon. I just don't want to buy at the top, because think of the people that bought at the very high, even though it's still showing upwards. So I know, after these, as you can see, I have 2 green candles. So maybe it was a good time to buy. It could go further down, but we're going to talk about other things than that. But before I move on to the next thing, are there any questions on the SMA? So simple strategy, if it's looking like it's going up, you buy a call or go long. If it's obviously hitting a peak and going downwards, put or short. Okay, let's move on with the story. Okay, this is a very decent indicator. This is where you can use this in conjunction with the SMA. So this is called RSI, Relative Strength Index. It's a very popular indicator. A lot of people use it. So the strategy is you buy it when it approaches the 30% line, and I'm going to show you what that is. Or if it dips below the 30% and then approaches back upwards, and I'll show you what that looks like. Or when to sell if it's dipping below 70%. So this is an indicator that's it's similar to an oscillator. You'll see it go up and down. That is a horrible color. I don't know why I chose that. But you'll see it looks something like this. Okay. What does RSI do? It measures the bulls versus the bears being bought versus sold. So it does actually analyze some volume. Okay. So with Thinkorswim, with basically every broker has this. But so now I'm going to add to my story. So again, click on my studies, add study. I go to all studies because they don't, RSI. Okay, so as you can see, it's down here. I can move it. I just don't remember how. But as you can see, and I'm going to actually make this chart just a little bit smaller so you can see. So again, here are the strategies behind RSI. So this measures bulls versus bears. And I want to see what my length is. So when I click edit, my length is 14. So it's good if you guys keep track of some of this stuff, whether it's with like a sticky note or just, mental. Length is 14. So this is going by a 14-day time span. Now, can people trade this and just literally look at your highs and lows? Yes, I've actually done it before too. But, oops. So when I'm looking at this, what I want to look for, so there's actually, this is a kind of not as good an example with Amazon, but as you can see, there are red pieces right here, and I'll highlight those. So you've got red right here, red right there, red right there, a lot of red right there. So, and I saw your question, Volkan. I'll answer that in a second. So the strategy, again, you watch this oscillator go up and down, and once it passes, so you can see, here's this line right here. And let me write what those are. And I'll do the red. So this would be considered oversold. And I'm doing the colors for a reason. This is, wait, I got those mixed up. I'm sorry. This is overbought, meaning that so many people have bought it to where it has risen in price, it would make sense to take profit. And then the bottom part of this is oversold. Why is it not doing? Okay, there we go. This is oversold, meaning people kept on selling it to where people will likely buy it, and thus driving the price upwards. So with Amazon, I didn't choose a good one, but as you can see, it hit that 70%. And if I were to look at this, so this one just hit it and went downwards. So, it depending on when you got in and you shorted it, probably made some money. But look at this one. This was way up there at 73%. Oh, if you can't see, the percentages are right here. So the question was, how do you calculate the percentage? The percentages are right here on the right-hand side of the chart. So you can see here it is. Currently, right now, it's at 54%. So these are percentages. That's a good question. Yeah, sorry about that. I didn't explain that. So what a strategy would be for RSI is you look at this and the percentage. If it's smack dab in the middle, it could go either way. It's like you don't know. So that could be an indicator where, okay, the SMA, so this is now where you're getting a better story. So the SMA is showing it slowly going up. However, RSI is in the middle. Middle is 50%. That because it only goes, percentage can only go between 0 and 100%. So it could say in terms of a technical standpoint, or if you're going to day trade it, you're like, I don't know unless there's going to be like some news that could affect the price up or downwards. So I may want to be cautious if I want to enter this stock. All right. Now it has gone down. Now you don't have to have your strategy to where it's at 30%, but that's where you can get into trouble. So a good example would be like right here. So here, Amazon was down at about 2,900, and I'm just averaging, and it was down. It was at, and I'm looking, it's at 32%, which it shows down here. Now, could I have gotten in? Yeah, I would have made money, obviously, because I got in right here, and then look, it kept going up. But, you could have bought right here. At this point, went long, but see it continue to go downwards. So when you're doing some of these technical analyses, you have to be very careful. If you have a set plan, which is what I talk about, like for me, I only go when this hits, passes, and then goes down. That's how I do it, because this could still keep going up. So look, good example is right here. See, this just kept going up, 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 up. Then it went down, 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 down. Now it's back. So, that's when I would be like, okay, it passed this 70% line. That's a good strategy. Okay. Any questions on how RSI works? There is a more advanced thing that actually occurs a lot in more advanced technical analyst stuff. If you want more, look up divergence. Not this is the discussion I put, so I reminded myself. But if you look at divergences, those are actually really good. A divergence is when you have a lower overbought or oversold, but then the price is more fluctuating. So that's actually a more advanced thing. But if you just Google divergence in stocks with RSI, I just posted it in the chat. You'll get some resources, and I'm going to go over that stuff too. So that may be a good video to talk about. Cough, cough, hint, hint, wink, wink. But so yeah, the question was, can you explain in percent what the best percentage to in and out? A common strategy, very common, is you buy it when it passes the 30 and then goes back upwards past the 30%, then you sell when it dips below. So right here, let's just say right here, let me delete. So see right here, it goes up and then it went downwards. That would have been a short position, meaning, or a sell, because I want to get out and then get in at a better price. But as you can see, this SMA was still going upwards. So here's a strategy that I would use when I'm looking, because the next question is, should we always look at RSI and SMA together? That's up to you. Some people will say yes, other people will say no. It just depends on how fast they want to get in and out, or how the risk tolerance is. So if it passes the 70, this line, and then it approaches downwards, now I kind of like to watch it because I'm looking at the SMA too. It's still going upwards. So if I went just based on the RSI only, I would have sold when it dipped downwards. What percentage? I don't know, 68, 65. That's up to you on what works for you, because everyone does things differently. Some people even change these percentages, which you can do. Overbought, oversold. I can change these to 80 and 20. That's another strategy. That's why I use Thinkorswim, because we're now getting into where we can modify everything to our own liking. And as you can see, if I change it to 80%, look, it's still telling me to hold Amazon if I held Amazon. But the most common is 70-30. It always defaults to that. So other day traders will actually do 60 and 40. Like they go pretty minute into that, and then they just literally do the same stock over and over and over again. Okay, so again, going over this strategy is, now you have two technical indicators to look at. So if you were to day trade, so I'm just showing long-term trading, but all of these work. It can work to whatever your time frame is. If you want to hold a stock for 5 years or trade that same stock for 5 years, you can totally do that. I'm just using Amazon just because I've day traded Amazon for the longest time. But as you saw when I was talking about it, Amazon has been stagnant in price. However, there's another tool that I wanted to talk about before we end for the day, because this is a lot of information. So the question is, what if going over 70% and stays long? Should we hold or sell? Again, that's up to you. If it continues going up in price, then it would make no sense to sell, unless you were going to literally day trade it, which if I were to just change my time frame. So if I were to change my time frame, which I just did, I switched it to 5, and I were to day trade this, this is where it can be a little different. So here's where things can get a little confusing. So again, going over, if you see right here, at this point, this oversold at this point right here, and then it started to go upwards. So here's where I would get in, kind of like right there, which actually, now if I were just doing 5 minutes and I day traded Amazon, you know, depending on what time frame I got in, you know, then I made money. However, if you look, there was a $10 increase, but look at the RSI. There was a battle. So, you know, there were, you know, because again, RSI measures kind of bought and sold or bulls versus bears. And there was a whole battle going on with Amazon today, because that's why it didn't move up. Now it finally started to go upwards. So this just happened to be lucky for, you know, if I were to hold, but if you held up longer term, then yeah, you would make more money. Even though the SMA is showing a slight decline, but RSI is going upwards. So this is conflicting. So that's where you have to figure out, okay, I'm getting 2 different signals. This is where it's like, do I set a trailing stop? Do I set a stop loss? Do I, you know, hedge my position? So if I had 2 calls, maybe do I buy 1 put just in case? There's those different things. Questions on that stuff before I go on for kind of the last thing for the day. I'm not going to talk about MACD just yet. I know some of you are probably wondering why not. These are simple, and these are kind of a combination of the MACD in some way. That's why I chose these 2 first. So if this was more, because this is the beginning to day trade, swing trade, or long-term trade, all these strategies work in conjunction with any type of trading strategy. So the last thing I wanted, what's the best strategy to look at SMA? Okay, well, let's take a look at. So the question is, what would be a good strategy to look at SMA during day swing trading to make quick profits when stocks are moving like crazy? For example, Neuro. So let's take a look and see what's going on. Oh my, okay. I don't, okay, so, okay, well, this is a great example. So a lot of trading, in my opinion now, has been what's on momentum trading and a lot of like this stock was stagnant and then all of a sudden just shot up to like whatever amount. So if you were to look at this, you can see it's building upwards, but then there was a sell-off. Think about it. It makes sense that if you know, people are going to sell, so you have to use some common sense too. If this stock is really hyped up, you can see the SMA is slowly going upwards. I can see RSI is just considered overbought. So how would you play this? See, this is all in the red. This is like basically, you know, you've got not warning signals, but you're getting signals like everyone's buying this. However, you just don't know when is it going to be enough. I don't know what the news was for this. So this is where you would have to do some more research on why is the stock going up like this? Could it continue to go upwards? Is it a meme stock like GameStop? You know, things like that I don't really look into as much, or like AMC. But you can see still this SMA, this moving average. So again, I still kept mine at 50. So for the day, it's showing that it's still going upwards. Now, can it go down? Sure. I mean, there's that. So when you deal with stocks like these, sometimes these indicators may not work as well as you want, because this would be a hype stock, meaning everyone's trying to get into it and make money. There are other indicators that I'll talk about on Thursday, like Bollinger Bands and MACD, to help you determine some entry and exit points for this. But this is just the basics that we're getting into. We still have a lot of people. I know I said 6:15. I'm willing to do another segment right now, like just one additional topic piece if you guys want. If not, we can end there, because I know this was a lot of information for you to digest. So I'll leave it open to the floor for questions. Well, yeah, we can, let's do questions. Can you know RSI indication in advance if it's going up or down? If that's a divergence thing, that's where I would want you to do that, because that's an advanced piece. And to find those, you have to really look at it. There are not indicators, but like scripts that are written for Thinkorswim or whatnot that can show you where a divergence is occurring. A divergence is basically an indication of it going up or down, but that's a little bit more advanced. I don't want to talk about that just yet. If you want to on your own, just Google divergence with stocks and RSI. How do I become a millionaire by dawn? Patience is money. Yes, yeah, I hear you. Okay, I'm going to do one last thing, and I chose Amazon for a reason, because it has a pretty good one. This is talking about zones. So zones, and I'll talk about zones again on Thursday, but zones are basically looking for patterns for the high and low for the day. So that can give you an idea of how high can the stock go or how low can the stock go. Oh, and then Misty asked 20 or 50 day. Again, remember when you're dealing with the moving averages, so it's based on what your chart looks like. So if you're doing the day chart, you're going to look at the 50-day SMA, which is what I'm using. But if you then zoom into the 5-minute, 5 times 50, because again, it still goes by the length, not by the time, then it's going to do 250 minutes. So that's, roughly what, 6 hours. I can change this to 20. So see, the shorter you get for the length, it's going to be more choppy compared to smooth. If you have a smoother thing or a longer length, then it can show you a broader picture. But let me talk about zones real quick. So dealing with zones, I use the day and I can use the 5-minute. But it's good to know the zones for the longer periods of time, so then you can develop what's called your support and resistances. So support zones are going to be, and let me type it out. So support zones where I may buy, resistance zones where I may sell. And I say may for a reason. Okay. Now with other brokers, again, I don't know some stuff, so sorry. But on Thinkorswim, I click on drawings, drawing tools, and I can use a line. I can use, where is this little guy? Give me a second. Rectangle, yes. Okay, when you're looking for zones, you can have multiple zones, and it's good to know, because then you can hit, because they may say this will quote unquote test a certain area. But when I look for support zones, I'm going to look for the lows. So I can see just by looking at the daily. Look down here. That's a bad word. It hit a low there. It hit a low there. It hit a low there. Hit a low there. So if I were to draw a zone, I would draw something that would go, would go roughly to that. So what I just did was I drew a zone. So what this means is over the whole year, this has gone down, but then gone upwards. That's my zone. That would be my support, meaning where it hits a low amount to where people are like, I would be stupid not to buy it. Now, I'm not saying that's advice, but that's just what I've seen. So this could be your first support zone. So if I were to draw another support zone, and this helps with day trading and long-term trading. So again, if you just change your chart to a 5-minute or even a 1-minute, so you can get pretty precise, this still works. Doesn't matter what type of trading you're doing. But if you're day trading, you obviously shorten it to a 5-minute or 1-minute period, but even the day stuff still helps you. So I'm going to look for another zone. Okay. Now, again, everyone's a Da Vinci or a Picasso, however you want to say it. It's, you know, everyone has different opinions on things, and, you know, and I'm not, everyone's different, but I can also see in terms of a zone, oops, notice most of it is still within this area. So let me do a rectangle so you can see. Most of it has gotten into this area. There are some parts where, as you can see, it continued upwards. Yes, and that would be redrawing your zones. But if you see for the longest time frame, it has gone past it, and then now it's gone back down. So I'm going to draw another zone. Now, you can call this zone whatever you want. You could call it like, this is where it trades at. So if you were to day trade this, you could do that. So if I go to the 5-minute, well, it didn't work. Hold on, guys. Oops, let me go back to the day. Sorry. So if you can see this trading zone, it's past this now. So this could be where you could redraw your zones. So this is a different part. So if I were to look back, so it's like, oh, I wanted to day trade this, but my zones aren't there. But you can still see over here, it hit a high point, high point, high point, high point. Yes, right here, it went upwards, but we don't know. You know, we don't know where it's going to go. This could have been a huge rally because see, look, case in point up here. It rallied upwards, then it finally found its zone again until it rallied back upwards. So it's kind of going into, okay, how's this doing? You know, you could even say, oh, well, the zone is down here, you know, up here, and it's just trending upwards. So again, this is where it's like, you can be your own Picasso or your Da Vinci, and, you know, you can use your own, drawings. So I would draw another zone. Oops. So what these zones can tell you, so now look right here. So I can see that it did hit this zone that I drew. Now, was I precise on this? No. You know, as you can see, I didn't include this part, but, you know, see it included here. But again, this can give you an idea of, okay, I've got zones now where I know where things will trend upwards or downwards, and I can actually change the color of these too. So if you just right click on the zone, edit properties. Oh wait, I thought you could. Oh, color. So look, now I have a green zone. That's a buy zone that I just made. I just changed this to red. This is now a sell zone to me. This is a neutral zone. You know, you can do a lot of cool stuff with Thinkorswim that you can't do on other platforms. Okay, if you were to day trade this for Amazon, well, look, this was my sell zone, which is what it was doing. However, it's been in a sell position for a long time. Yeah, and David said it's all about how you draw it. So like I was just, you know, roughly drawing stuff. You know, if you want to get super technical, no pun, you know, you can. Now, you know, so if you were to day trade this, let me get rid of this drawing. So let's just look at the day. So you could totally do this during the day. Hold on, guys. Now, when you're drawing zones for a day, I tend to look at 2 days worth of data because you kind of want to see where it was heading the day before. So if you can see, and look, it actually follows the zone pretty similarly. So I can see right here, give me one moment. I can see it hit this zone down here. Now it wasn't up there, but you know, this is a $20 difference. And with Amazon, $20 is not a lot in terms of a stock, but you can see, so if I were to draw my zone, so I would draw this zone right here. Now, is it always going to be 100%? No, but see it tested or went down to here multiple times. It did go down there. It happened once on one wick, And I'm doing a 15-minute just so I can see a broader picture. But now if I go back to the 5, oops, sorry, I'm using Zoom and other drawing tools. But as you can see, so I'm at the 5-minute, but as you can see on this, it approached it. So if I were to look at my technicals, okay, so, you know, it was going down here, RSI is going up. So whether or not you would want to get into this, I wouldn't have, because I'm getting mixed signals, but you can just trade based on drawing the trend lines. So if I were to look at another trend line, here's what I would look at. So it did go down there. Oops. It did touch down here, but notice for the rest of the day, this area right here, that's a bad circle. Right there. You could have drew your trend line there. Now you can see the trend line, you know, was further upwards, but then that can give you a time to buy and sell. So I see right here, this is downwards, and then look, there was 2 small things, but look at my RSI. RSI was still upwards, and it was all weird, but there was a downtrend at here. Now it's at 42, so 50% is the middle point. 42 can mean it's over sold. It's just up to how you play it. And then you can get back in. This morning was wonky, however you want to say it. But yeah, with that, I think that's a lot of information for the day. Let's just answer any other questions. If you have another stock ticker, just looking at the technicals and the zones that I looked at. I don't want to use any others, but if there are any questions with that. Okay. Ela. Okay, so so I'm going to change. So this is 5-minute. Again, this is a 5-minute. So let's take a look at some zones. I can see, you know, multiple zone there. Now, if you look, this zone, these trends, notice how they're going lower. That's where you may want to reevaluate. So you can, and then what you can do is actually draw trend lines, which I didn't talk about, but I just want to talk about zones first, so you can start seeing where you can see where it's starting to test things or hit those price points. So if I were to go outwards on a day, so if I were to look at the day, this is what a technical analyst would look at. Okay, it's been slowly going downwards. Big spike, big spike, big spike. You can see RSI oversold here, but it kept going. And then it went further down. So now this is conflicting information on this point right here, as this price is, oh wait, the SMA is going upwards, RSI is going downwards. So when you're looking at some of these, and this is something I didn't talk about and I should have, this is taking the averages of everything of the closing price. So it's getting these large points and added it in. So that can skew this. So when I see this part right here, the range, like it added this in there. So this is going to be skewed off. It added this. Notice how it jumped up here. So this would be okay. It's doing some stuff. And I didn't talk about a couple of things because there's what's called testing the SMA, meaning it hits it, goes downwards, things like that. There's just a lot of different stuff. But so in terms of determining the zone, it seems like, well, you know, this is all over the place. I don't know why. I don't know a lot of these stock tickers. I'm sorry, guys. But I would say a good zone could be right here, because notice it was in this zone. It tested it right there, and that went all over the place, went around a little bit. But for this over here, it's like, I don't know. This seems, I don't know the news on that, so I'm sorry, but you may be able to know. like another zone. So as you can see, it's been around here, but it's been on a downtrend, but the market's been on a downtrend. So this could be a good opportunity to get into. Check RSI. If it goes below to 40, maybe goes upwards, a good time to get in. SMA still showing upwards. Let me do one more mRNA. Of course, all of these. Oh, this is Moderna. Oh, okay. So looking at this, SMA is going upwards. However, there was a red day today, so this could be a good time. However, this is considered oversold. Now, this may still continue to go upwards. We don't know. It may continue to go, further up, down, further up. So a strategy would be, maybe let it ride, and then if you want to buy a put on it. Now, this is where it goes into looking at other stuff. Why would I want to short something if I know it's going to potentially continue to go up because of the vaccines? So you have to do other stuff, not just technical analysis. So if you're in it, great. If not, you can likely day trade it. I talk about other stuff like average daily range. So you can see, so if I were to look at the 2 days worth, it had a huge shot. So no pun on that. That was completely unpunnable in that respect. But I can see it's hit this line multiple times right here, this zone. So this could be a good point to where either you want to short it or get out, and then or let it go further down. Day trading, it has tested it multiple times right here at this zone, right here. See how it hit, bounce, went up, back up, then went all over the place. So yeah. So we will end it if there are, unless there's any other questions.
At what point do you realize it's a no buy, no matter what? Like, at what point do you realize this stock? No, there's no way you should buy it.
Oh, no, that's a great question. I tend to stay away from stocks that are, I would consider meme stocks by Wall Street bets. Whether or not they're a legitimate company like Palantir. I know a lot of the people in this group are really adamant on Palantir. That's one thing I just won't touch, because when you're dealing with stocks that get so much hype from either stock twits, Wall Street bets, or just Discord groups, these indicators may not show the true story, because you're going to get a bunch of people that will go in or out of the stock. So it goes back to math. So think about like averages. If you were to say like your average test scores were, let's just say 30, 40, 30, 50, lower, but then you've got like 100% or a 98%. That's going to throw off your averages, because a lot of this stuff is math. It calculates a lot of the stuff. So as you can see right here, so this is actually a really good example for Moderna, is if you see right here, these prices, they're going to be added into this SMA, the simple moving average. So even though truly maybe Moderna is not supposed to be up there, there was a lot of hype because of the coronavirus Delta variant, and likely pushing for, again, I'm just speculating on the news. I'm just making some stuff up on this respect. But if I know that there's a lot of news on the stock, that's going to throw a lot of indicators off. And then that's where you're kind of not flying on an autopilot, you're manual pilot. Another thing that I would not trade on is earnings, because that can have different effects again, but a similar concept, because it's going to add in a lot of wonky data, because sometimes the earnings, you're going to see huge swings in price right after the earnings are released. And then it's go by, okay, what does the data show? What's the financials with that? So when you're day trading and swing trading, it's also good to get a good idea of the sentiment value and then the financials. Hopefully that answers.
Yes, it did answer my question. It did answer my question, but I just want to piggyback onto that. With all the manipulation that's going on with the hedge funders, Wall Street, I mean, does this all come to play with that? Or sometimes hedge funders are able to kind of overlap all of this analysis and have it going a totally different route?
I mean, this is all going to be computational data. They'll have algorithms, and that can be in effect. But or kind of, if you've heard like whales, where whales will come in, like people with big bucks, where they can manipulate the data. Now, a good example are, because I trade futures and commodities, and so futures is just basically I trade off of the index of the S&P 500. You can see where the price of something is either going up or down to then do a complete 180 the next time. It's just, it takes a lot of time to see a lot of those patterns. Like a good one is right here. Huge increase, small increases, still red. Now that can just be the manipulation, and then poof, just dumps it. Whether or not you can speculate if it's hedge funds or shorting, it's like no one really knows that question. But like, because they use algorithms to trade in particular price points, so they'll do block trading. So let's say a good example is, let's just say they wanted to short this and completely psych people out on this stock. They would initially do a huge hype. I'm not saying they're doing this, but this is an example. Huge hype. Their scanners or alerts go off saying, hey, this thing, so look, my alert went off because it went oversold. I may want to short this. But then they'll buy more, get more people in, because they know their volume. They know how many stocks they own or how much cash they want to get into this. And this can also be people too, with like millions of dollars. And then all of a sudden, after a specific point or time frame, that's where you see these huge dumps. And then, and then that's where you can look, but you can still trade off that though, because if you start seeing, okay, this is still oversold, that's still to your advantage. You know that you can likely short this or buy a put, but you just don't know when. So that's when you would want to go off, okay, there's a huge drop, then you may want to get in. So again, this is a 5-minute time frame. So in 5 minutes, this thing dropped, 36 to 30. So if you were to buy one put, now I'm not saying, this is in a perfect world, but one put, if you were to do at the money, this is like a $500 play right here. And if you were to continue to hold, that's huge. This would have been a $3,000 plus play within 5, 10, 15, 20, 45 minutes. There's another question. Do you consider trading volume on the day before into your trades? Yeah, I haven't talked about volume yet. There is a lot of truth to that. I'm developing a scanner to monitor low volume to high volume to percentage prices, and then show me a list. You can look at volume. Volume's important too, but when you're day trading, you may want to just go by the price point, because as you can see, this is what you can use volume for. As you can see, notice how there was a lot of volume by these blue bars, and it slowly declined while still going high in price. That's a warning signal for me, just from seeing that. And then notice how low volume, then that's where it dumped. So you can use that volume to your advantage. That's another strategy. There's just so many strategies to go over. I'm just trying to give you the bare bones and skeletons.